Good morning, everyone. You're welcome to this webinar with the theme, Promoting MSMEs Creditworthiness, Effective Bookkeeping and Loan Accessibility. My name is Onome Ako. I'm the Executive Secretary of Credit Bureau Association of Nigeria, and I will be the moderator of this webinar. This webinar is the first edition of the series, and it has been set up to impact knowledge on how MSMEs can address the challenges that they face in accessing loans from banks and from other financial institutions. What we're going to be focusing on this morning is one of the challenges, which is bookkeeping. It is believed that all the participants will be well informed to make the necessary adjustments in this area that is very critical to businesses, and that would, of course, help in the boost of your creditworthiness. So without any further ado, let me introduce to you the speakers of today's webinar. We have the Managing Director and CEO of CRC Credit Bureau, the current Chairman of the Credit Bureau Association of Nigeria, and the Chief Host of this webinar, Dr. Tunde Kupola. He has over 25 years of rich work experience spanning the private and public sector of the Nigerian economy. He holds a bachelor's degree in economics from Obafemi Awolowo University and 2 master's degrees in economics and in banking and finance from the University of Lagos, and a PhD from WITS Business School, University of Witwatersrand, South Africa. He's also an alumnus of the prestigious Lagos Business School, the Harvard Kennedy School of Government, and the Wharton Business School. He has to his credit several awards and recognitions, especially for his role in leadership development, entrepreneurship, and self-empowerment of the youths. Sir, you're welcome.
Thank you.
Next, we have Mr. J. Taiwo Kupola, who is the main guest speaker of this webinar. He qualified as a chartered accountant in May 1990. He holds a Bachelor of Science degree in Management and Accounting from Obafemi Awolowo University. He had his professional training with A.B. Adepoju and Company, Chartered Accountants, an international firm of KPMG, Pitt, Wartwick, Annie Ogunde and Co., also Chartered Accountants. He left KPMG, Pitt, Wartwick to join the Treasury Department of the defunct Capital Bank International PLC, and later worked as the finance controller of Merchant Credits Limited. In the last decade, he has been an independent consultant to small and medium-sized enterprises in the area of management, accounting, finance, taxation, and secretarial services. Sir, you're welcome.
Thank you very much.
Next, we have Mrs. Jamila Sharif Ayedu, the Managing Director and CEO of Credit Registry. She is an international professional that brings multifaceted experience in business, technical, and people management. She is a co-founder of Credit Registry Corporation, a software technology company headquartered in Washington, USA. In 2014, she was appointed the substantive MD CEO of Credit Registry Nigeria. Prior to this, she served as the Executive Vice President, Business Development, implementing growth strategies that ultimately accelerated subscription to 100% of commercial banking space. She has received the CEO Today's Global Award and is recognized in the top 30 leading women in fintech in Nigeria by Financial Technology Africa. Madam, you're welcome.
Thank you,
Finally, we have the Acting Managing Director and CEO of First Central Credit Bureau, Mr. Oladimeji Olamide Peters. He has over 10 years working experience in business development and analytics, both within and outside Nigeria. He's a graduate of economics and holds an MBA from Durham. Sir, you're welcome.
Thank you.
So please note that we are streaming right now live on Facebook and on YouTube. So if you can't sign in to Zoom, by all means, please feel free to participate on our Facebook and our YouTube platforms. So we will move now to the next item on our agenda, which is the welcome speech of the CBAN chairman, Dr. Tunde Kukwala. Sir, the floor is yours.
Thank you very much, Onome, for the kind introduction. I graduated from the University of Ife, not Obafemi Awolowo University. That's not a joke anyway. Good morning, everyone.
Morning, sir.
Good morning to our guest speaker of today. Good morning to my colleagues in CBAN, Jamil and Oladimeji.
Good
To our
morning.
participants, good morning. It's my pleasure as the chairman of CBAN at this time to welcome you all to this important national conference of the Credit Bureau Association of Nigeria. As you know, Credit Bureau Association of Nigeria is the umbrella association. It's a BMO, not for profit, and a private a non-governmental business management organization that was established in 2012. And the main purpose is for us to drive the culture of credit reporting in Nigeria. We also, establish ourselves to be able to see how we can deepen access to credit, especially for SMEs and consumers, who are the major parts of the society that always have challenge in access to credit. So we have a lot that we do in advocacy on the issue of credit, and we also do a lot of capacity building for our stakeholders. Now, in recent time, you realize that it's a lot that has been said and that kept on being said, that they keep on talking about SMEs, MSMEs. Even the federal government of Nigeria focuses extensively on what can be done to enhance the capacity of MSMEs because of the role they play in the economy in terms of production or productivity, in terms of employment generation, value addition, innovation, and so many benefits that MSMEs bring to the table. But in Nigeria, we have over 40 million MSMEs as recorded by the National Bureau of Statistics and SMEDA, but less than 4% of those numbers have access to credit in Nigeria, even with all the efforts that the credit bureaus and the financial institutions and the central bank have put in place. So we as credit bureaus, under the umbrella of our organizations, Credit Bureau Association of Nigeria, decided this year to say, how can we help in deepening access to credit for MSMEs? We then decided to play our role by, trying to focus on capacity building and awareness creation for MSMEs generally. And we realized that access to credit becomes very important for MSMEs to be able to fulfill their obligations and perform their role as engine of growth of the economy. So what do? We decided to say, let's have, webinars to build capacity of MSMEs. And the theme of the conference is MSMEs and access to credit. And we'll run series of, programs on this particular theme, MSMEs and access to credit. And we will then begin to look at issues that, affect MSMEs to be able to deal with the issue of access to credit. Those issues include poor bookkeeping, include lack of capacity to, write and present good business plan, lack of adequate business presence or branding, and of course, the challenge of bringing forward, collateral and security that can be used to access credit. So these are issues that we'll be examining in the next few webinars that we are going to be doing. Like I said, the essence, the focus is going to be promoting MSMEs creditworthiness. Today, we are starting with one of those issues, and that's about bookkeeping. So today, the theme is promoting MSMEs creditworthiness, the role that bookkeeping can keep. The role that bookkeeping can play in access to credit. And we have brought a very renowned person who is a professional to the core, an accountant, And but not just an accountant, he has been engaged or been engaging with MSMEs for decades. He knows the pain points when it comes to bookkeeping and record keeping and financial issues relating to MSMEs. And so he will be sharing with us his experience. He will be telling us and the MSMEs who are attending this webinar this morning on the key things they need to pay attention to when it comes to bookkeeping and how that can help them to be able to have access to credit. And then, of course, thereafter, we will have a panel of discussants who are basically the directors of Credit Bureau Association of Nigeria, who are the CEOs of the 3 licensed credit bureaus, myself, and then the Jamila of Credit Registry, and then Oladimeji of First Central. So my job this morning is just to welcome all of us and to underscore the fact that for us at CBAN, we pride ourselves in our ability to, develop capacity to advocate for what we think will prosper every businesses and every individual when it comes to accessing finance. And of course, we want to see how we can drive the initiatives that can deepen access to credit in Nigeria. I hope we all benefit from this conversation that we are going to have this morning. And I implore you to take advantage of the specialists that we have that will be talking to us this morning. Once again, I welcome you and I say good morning once again.
Thank you very much, sir, for that open speech, the welcome speech. Now, I'd like to proceed with the presentation that's going to be made by our main guest speaker, Mr. J. Taiwo Pupola. All right, sir, the floor is yours.
Good morning, all. And I want to first of all appreciate Credit Bureau Association of Nigeria. And I recognize the presence of the chairman, Dr. Tunde Pupola. And please pardon me, all other protocol duly observed. Before I go into the presentation, Credit Bureau is a very, I want to say, very good development in our economy, especially with the level of MSMEs. And I think by this, you are opening up the economy to the MSME. I need to say that before moving into the presentation. However, we all know that MSME is a known fact that they are the bedrock of the economy, but then bookkeeping is one of their problems. And that's why I want to say once more that this presentation is appropriate and it's at the right time. It's at the right time. Please, can you help me with the slides at the other hand there?
Okay. All right, sir, you can go ahead and present from your end.
Okay, okay. Okay, this morning, this presentation, first of all, deal with the introduction, then we will look at the definition of bookkeeping, then we look at why bookkeeping matters in running any business whatsoever. Then we go through the 7 steps of bookkeeping process that MSMEs they need to be aware of. Then we close by looking at, do I do it myself or do I use a professional? So I like to comment, because each time we come across people who know the importance of bookkeeping, we always want to commend them, especially in our climate here, where people just run this as a way of just putting food on their table. So when you see somebody like that, you commend them for having mind of helping the economy, because if you have proper bookkeeping, you are going to help the economy. So I need to appreciate all the entrepreneurs that are always rolling up their sleeves to ensure that they keep their books. Bookkeeping can be tedious. In fact, it's a technical area. So those who are putting their sweat equity in order to ensure that this priceless thing is done, and for them to have financial insight into their business, we always appreciate them. Bookkeeping, you are driving blind like a car without a gas gauge. Sure, the car is driving fine, but who knows how long before you have to pull over and wait for a friend to bring a jerry can. So in this webinar, I'll just walk us through the basics of what bookkeeping is, why it matters, and the 7 key steps to getting your own bookkeeping process off the ground. What is bookkeeping? Bookkeeping is the process of tracking all your company's financial transactions, so you can see exactly where your business is spending money, where your revenue is coming from. And of course, once you register your company, you are a candidate of the tax authorities. And so we look at which tax deductions you'll be able to claim. And in other words, you can look at bookkeeping from the view of, it's just a way of capturing your financial transactions, putting them in proper perspective in terms of summary, then generate reports that you can use for decision making. Having said that, I'd like us to look at why bookkeeping matters in any business, in any organization where money is to be discussed. The number 1 thing is that bookkeeping ensures that you don't miss out on deductions. Why deductions? Is the fact that when you are in business, you have to pay tax. So if you don't arrange your things and your financial transaction in such a way that you can make you enjoy deductions from the tax authority, you might discover that you are just working for the government. Then number 2, it can help you when you have good bookkeeping. It is a good way whereby you can get a business loan for expansion. Thinking of expanding your business, if you need finance of any kind, having well-kept books gives lenders or investors a clear idea of your business current financial status and allows them to make financial projections about your company's ability to pay off your loan in the future. The reason why so many MSMEs are facing expansion, are facing difficulty in expanding their business, this is one of it. And that's why it is necessary. As many MSMEs that are here that are thinking of expansion, first of all, go and put your books in order. Bookkeeping is essential for you. Number 3, of course, when you are running your business, you have bank accounts, and the bank account, your money is with some other people. Proper bookkeeping will help you to be able to know where there are errors. So it helps you catch banking errors quickly. It helps you to catch banking errors quickly. Four, and this is more or less the most important part of it. It gives you a clear picture of where your money is going. Where your money is going. So many businesses have really lost out in these regards. You may be able to see your bottom line by glancing at your bank balance, but the ups and downs in your account are also telling a story. Are sales up? Are you shipping costs too high? Are your shipping costs too high? Who knows? Paying attention to your financial statement is a great way to get to know the story of your business. We are all very familiar with the stock exchange, where they do facts behind the figures. It is only when you have proper bookkeeping you can have facts behind the figures. So this is very, very important. And I want to give us bonus here. That is number 5.
Sorry, Mr. Ukola, can you put your presentation in presentation mode?
Okay. Okay. Is it all right, sir?
Yes, it's not yet, but you can continue if you can't do it. Just continue, please.
Okay. Okay. Organize. Sorry, no. Okay. Before I move to the next where to start, I wanted to tell us that one more important thing that bookkeeping, why it matters, is for decision making. When you are running a business, you are to make decisions. You make decisions every day. Bookkeeping helps you a lot in making decisions as touching your business. And bookkeeping helps a lot in the sense that you want to compare the amount you pay for certain service last year with what happened this year. You want to know the reason why. You want to know your sales. Where are your major sales coming from? It is bookkeeping that will tell you all these stories. And you want to look at your expenses. Probably you are looking at your administrative expenses. You want to know which one is really dropping money. And it is bookkeeping that can tell you all this. Let's move to where to start. Where do I start bookkeeping for my business? And before we go into this, I want us to know that bookkeeping is a technical area. And even when you, as a business owner, you want to do it by yourself, there's a limit. And so what I'll discuss here is just to give us an insight as to the knowledge we need in starting a booking process, and also those ones we will need along the line. So I might be making it so easier, but know that you will still need the you will need the assistance of a professional. Number one thing that you need to do is to separate your business and personal expenses. You need to understand that. To track your business expenses effectively, it is important to permanently separate them from your personal finances. Why? If you don't separate them from your personal finances, there will be muddled up. If you are running a limited liability entity and there is sufficient distance between your personal and business finances, there's a chance that you will muddle your finances. And it will be difficult to ascertain where you are. In such a way that it will be very difficult to ascertain the performance and financial position of your business. This also applies to running an enterprise, not just a limited liability company. There is a popular company, no longer in the stock exchange. What really ruined that company was that the director there and other directors could not separate their business from their personal expenses, and that's ruined the company. And of recent, I met a man at the tax office, and they were querying him, and he said something. He said, we had both the capital and the profits of the business, so I could not ascertain my tax. And that's the experience of most of the MSME. So first thing you need to do, separate your business expenses from your personal expenses. Number two, choose a bookkeeping system. Here, you want to know which system do I use to record my business transactions. Of course, there is manual system whereby people keep books, I mean physical books. But in this day of technology, there is software-based system. You can call it computerized system to keep your books of accounts. In fact, there are so many softwares, online softwares that are available now that anybody can use to keep the books of his business. But however, let me just keep it in there. You need the assistance of a professional to decide which software will be applicable. That's one aspect. After you have chosen whether manual or to use a software, the next thing is you need to choose. Am I using a single entry system or double entry system? There is no right or wrong. It's just a matter of picking the system that is right for your business and sticking with it consistently. If you are going to use single entry system, maybe your business is such that you are doing mainly cash businesses, mainly cash business. It could be. What is single entry? Single entry is a simple system that might work for you if your bookkeeping is very straightforward. Entries are recorded one time and either as either an input or output, especially if you are doing your own bookkeeping. This is likely the approach you want to take. Just record the item once. Then double entry. This is more complex. Of course, is what the professionals use. but also more robust. First of all, transactions are entered into a journal, and then each item is entered into the ledger. You get it twice, as both a debit and a credit. Let me just give you a little explanation here. Double entry is a way of ascertaining the correctness of the recording system, because every item of transactions are seen from two angles, from the credit side, from the debit side. And I wouldn't want to go too much into it because it's an area for the professionals. It may be confusing if I start explaining the whole thing. Using double entry method is complicated at first and may require help of a trained bookkeeper, but it will give you more accurate books overall. Think of it like double checking your answers before you hand in a math test. The next step is step 3. You need to choose an accounting method. Am I going to operate on cash basis or accrual basis? It is important to choose either a cash or accrual accounting method before you start your books. If you are using cash accounting, you only record transactions when money has exchanged hands. So if you bill a customer today, this transaction wouldn't enter your ledger until the customer paid you. Cash accounting system method of keeping records has some limitations, in the sense that we are in an environment we are discussing about credit. Cash accounting method does not accommodate credit. And that is why we always say it is inappropriate to be used in businesses. Even the government establishments that are using cash accounting, they have changed to accrual accounting. So what is accrual accounting? Accrual accounting, you will record the income when you bill the customer, rather than waiting for them to pay you. In other words, when you bill the customer, you are recording. As you are putting your money into your sales, you are putting into another account to say that, oh, this man is still owing me. If you sell something to maybe J and Co, as soon as you bill the person, you put it in your sales. J and Co, we sold so to J and Co, and you create account for J and Co, and you put it there that J and Co, we sell to him, he's owing us. So that's why accrual accounting is the best method for any business whatsoever. It totally capture your business transaction. You will record the income when you bill the customer rather than waiting for them to pay you. So at the end of the tax year, you've recorded all the income that you earned during that year, even if you haven't collected it yet. Same goes for deductions. That's the expenses. You deduct them when you are billed, not when you pay. If your company has inventory, in most cases, you'll be expected to use the accrual method. And that's another thing. Once you are keeping stock of goods, we call it inventory, then you are bound to use accrual method. Let's move to step number 4. Step number 4 is about categorizing your transactions. How do I categorize my transaction? That's the question there. Every transaction you make needs to be categorized when it's entered into your books. This helps your bookkeeper to catch more deductions and will make your life easier if you get audited. Let me just here mention and let us know that we have 5 types of accounts. We have assets, we have liabilities, we have what we call equity or owner's capital, and we have income and expenses. So the way you categorize your transaction will depend on your business and industry. Generally speaking, your transactions fall into 5 account types: assets, liabilities, equity, revenue, and expenses. Individual line items are then broken down into subcategories called accounts. Some accounts in your ledger might be revenue, ice cream sales, and also expenses on ice cream ingredients. And of course, the expenses on ice cream ingredients will constitute your cost of sales. So the actual work of categorizing will depend on your bookkeeping solution. If you are doing it all by yourself, you could make a note on each receipt. If you are using an online bookkeeping service, like we have a service like that, you just have a conversation with your bookkeeper about how you would like your most common transactions to be categorized, and it will take it up from there. If you are going to be doing your own bookkeeping, it is worth talking to a professional when you set up your system to make sure the accounts you create align with your industry standards and your tax accountant expectations. Number 5. This is very, very important. Organize and store your documents. In business transactions, we have what we call source documents or supporting documents. Source or supporting documents like invoices, receipts, vouchers, and so on are essential for proper bookkeeping. These are needed to prove the consummation of a transaction. Let me explain. The moment you issue an invoice to a customer and the customer receives the invoice, the transaction is consummated already. And so you have all the rights to put it in your sales. You have all the rights to claim your money from the customer. Invoice here is a source document. It gives proof. It gives you entitlement. The source document can either be in soft or hard copy. I've seen places where they decided to keep soft source documents. And in fact, these days, when you are operating on software, you discover that most transactions going on online are done with the e-invoice. At tax time, the burdens on you to show the validity of all your expenses rest on you. So keeping supporting documents like receipts, invoices, and vouchers is crucial. The only language the taxman understands is your documents supporting the transaction in your in business. I need to lay emphasis on this because most MSME ignore this area. They neglect it. Some don't collect invoices. Some don't collect invoices from people they purchase something from. Some, in fact, some don't pay attention. Some even sell without even invoice. And this is making them to leave a lot of money on the table. Diamonds may be forever, but the ink on your expense receipt is not. And that's why, you know, you can put it somewhere, maybe water pour on it. You can put it somewhere, maybe rat eat it. That's the limitation to physical records. But these days, you can always do it. You can photocopy it, or you can scan it and put it online, and it is there. When they ask you for it, you can always just print it out. So, you know, in our system now, our Nigerian tax authorities now accept digital records. So it's smart to use a cloud-based system like Dropbox, Evernote, or Google Drive. So you never have to deal with as much receipts. There are also some apps that can be used for this. Number 6, I mentioned earlier on about deductions. Here you need to organize your potential deductions. And I need to chip it in here. Bookkeeping is not a voluntary thing. In fact, it has legal backing. It is stated in CAMA that you must keep proper books of your business. Also, Company Income Tax Act make it compulsory for you to do that. So it's a matter of law too that you have to abide with. So in taxation, the golden rule on deduction of expenses for income tax purpose is that the expenses must be wholly, reasonably, exclusively, and necessarily incurred for your business. These conditions must be satisfied mutually. What we mean by that is that your expenses, they are deductions that can use against your profits. And you need to organize this to know which one the tax law allows, which one they will disallow. A lot of people, a lot of MSMEs, they will just tell you, oh, we are doing one ceremony. In fact, I saw one that's so embarrassing. They were doing one rituals in their town, and he contributed to it. And the man stated it that it was used for maybe worship of one. Well, that will not be accommodated by the tax law. It will not be accommodated. And that should be your own personal expenses, not in the business expenses. Let me just give us the example I have here. You are maybe you are a writer, you are not, and you just told us you bought a pen for 20,000 and you want to claim it. It will not go well because the law will look at it. Is it reasonable and is it necessary? So as an entrepreneur and a business owner, you need to pay attention to this because the onus of proof of your tax deductions is on you. And all this needs to be taken into consideration from bookkeeping perspective. Make it a habit. Make bookkeeping a habit. A lot of our MSMEs, they careless about bookkeeping. And this starts from the fact that who keeps their records? Where they are not keeping it by themselves. Who keeps it? How competent is that person? Secondly, are you paying attention to what is being recorded for you? And that's why you need to make it a habit to look at what is being done. Is it up to date? What they said they recorded for you as sales, is it the true situation? All this you can ascertain through your supporting documents. So it is easy to fall behind on your bookkeeping where you've got all that things happening. To stay on track, try setting a finance date, an accounting date. No, sorry, not an accounting date or in the sense of the way we use it in the profession, but finance date, let me say finance date, with yourself or your business partner once a month to get it done. What do I mean? You sit down. In fact, a month is even too much. A week, ascertain whether properly recorded so that errors can easily be discovered. Before I step down on this, I really want us to look at what I call a bonus. And the bonus is that step number 8 this time. Ensure that monthly financial statements are prepared and find time to check through and look at it to be sure your business is where it's supposed to be. What I mean by that is that you need to know the performance and strength of your business.
Well, sir, I'm sorry to interrupt, but you have about 5 more minutes to wrap up your presentation, sir.
Thank you very much. Thank you. So the next question is, do I do it myself or employ a professional bookkeeper? There are a ton of options out there for how to handle your books. They fall into 2 basic categories. That is, you do it yourself or have somebody else to do it for you. Somebody else do it for you. So that's the ball is in your court. But one thing I want you to know is that even if you are doing it for yourself, there's a limit because it's a technical area. You still need the assistance of a professional. The do it yourself approach. If your business is starting out as a side hustle with a limited budget, taking a do it yourself approach to get started. If you go this route, a consultation with a professional accountant to help you set up your books will ensure you don't end up with a year of books that have to be redone by a professional. Your do-it-yourself bookkeeping can be handled using a simple spreadsheet. You can work with one of the many online bookkeeping programs available. So, ladies and gentlemen, I want to thank you for the opportunity to just share a little with you, and I pray that you make use of it. Thank you very much.
All right, thank you very much, Mr. J. Taiwo Fukola. That was a very enlightening and rather rich presentation that you made. Thank you very much for that. Please feel free to put in your questions and answers. Your questions in the question and answer section. If you have any questions based on this presentation has been made, please feel free to put it in the Q&A section here on this platform. Okay, so let's begin now with the panel session with the CBAN chairman and the directors. I will be directing the questions to each of them one by one. I'm going to begin with the CBAN chairman, Dr. Tunde Kukbola. It's a two-in-one question, actually, and it is, how does effective bookkeeping assist in accessing finance for MSMEs? And what is the link between bookkeeping practices and credit reporting?
All right, thank you very much, Onome. And let me sincerely thank Mr. Kukola for that wonderful presentation. He seems to be a teacher. He took his time to explain everything because the accounting profession, people believe we are too boring because the profession is boring. But you try to make a very interesting presentation that make it interesting to MSMEs. So I will just follow up from where you stop to look at what is important relating to bookkeeping and access to creditworthiness, and also bookkeeping relating to credit reporting. Okay, so let's take the first one, bookkeeping and creditworthiness. What are you trying to do? You are trying to get a loan, right? You are trying to get access to finance. You are interested in using other people's money to be able to build on your business, to expand or to start or to grow your businesses. And so it's important for you to have records that everyone will see the performance of the company. And I think that's the first important hand-holding that you see between creditworthiness and accounting and bookkeeping. If you don't keep records, how do we know what you are doing? So that's the thing. So what does not, what when you don't keep record, then it means you are not measuring it. And that's the first thing you have to have at the back of your mind. And Mr. Kukola made a very interesting comment also about, even by law, once you register your business, you are meant to keep records because you are supposed to be making annual returns. You are supposed to be paying taxes. So if you don't know what you are selling, how much you made, what's your profit, what's your liability, what are the assets you have acquired during the year, how does the tax authority know how much to tax to you? I mean, the tax you are supposed to pay, or whether you are even exempted from taxation based on the new, Finance Act of 2020 that we are now operating, that says if you have revenue less than 20 or 25 million, I think you are supposed to be exempted from taxation. So you have to keep those records to be able to know for us to know what happened in your business during the year, to be able to know the transaction that you have done, to be able to know the performance of the business and the health of the business. So the finance, accounting is the language of business, and you cannot run away from it. That's the only language that business understands. So when they ask you what's the performance of your business, they're asking you what's the profit, what's the revenue, what are the expenses, what's the balance sheet size, what's the shareholders fund. All those questions can only be answered if you have proper record. And like he said, it's not a rocket science anymore. You need to now digitalize your record. And that's the second point I'm going to be using to link it to creditworthiness. If you don't digitalize, if you don't use technology, if it's not kept in ways that can be accessed easily, how do you get, so there are a lot of funding opportunities are there. There are interventions funds from government, there are funds by fintech companies, there are funds by financial institutions. Some of them, you don't need to visit any bank now to access those funds. They need to have access to that, your record. financial records. And so if you don't digitalize, there's no way they can have access to those records. So the first thing is for you to have the financial record, first of all. The second thing now is to upgrade your status to keeping those records using computer, using technology to keep them in a way that it will be easy for it to be accessed by anybody or by any party where you want to have relationship with when it comes to accessing finance. The third one, to talk about creditworthiness, is about keeping a record of the strategy of the business. You know, sometimes that can give an insight into how much exactly do you need and for what purpose do you need? How much do you have now? So you need to be able to do a cash flow management. That's what we call cash flow forecasting. So if you run a school now, and this is July, this is June ending, by tomorrow July starts, you go on holiday, you are going to resume in September and October, and you are going to have new students, some returning students. You want to pay, you want to be able to buy uniform, buy books, buy all of that. And you want to then be able to go to an institution that can give you money for all of that. If you don't have a forecast of all those things, there's no way you can be able to know how much you need, how much you already have, and what's the funding gap that you are going to have. And then that's what you are going to approach a financial institution to support you with. And they want to see those records. And that's the only way they can assist you. So let me just limit it to those three areas as to the relationship between bookkeeping and, access to and credit worthiness or access to credit. But let me also talk about the relationship between bookkeeping and credit reporting. Now, so we're talking about credit reporting is about making sure that there's a comfort to your lenders, to lending institutions, to those who want to give you money, that you have the capacity to pay and you are willing to pay when they give you that money, that you are willing to repay the loan. That means they need your financial records. That means they need to see the track record of what you've been doing. And the only way for them to do that is to be able to see that you have accounting system, you have bookkeeping system that is very good, that is transparent, that is not cooked up, and that is preserved in a way that can be accessed by them. So you need to then look at 4 areas that are very important. First of all, they may be interested in your liabilities. Liabilities are what a company owes, OWE. Assets are what a company owns, OWN. So your liabilities are what you owe. They want to see, who are you already exposed to? Have you borrowed in the past from somebody? Are you servicing some loans now? So a record of that is extremely very important to be able to determine your creditworthiness. And that's very important for that to be seen from your bookkeeping records. Who are you exposed to? And exposure may not necessarily be to financial institutions. It may be also to suppliers, vendors, and people who have supplied you raw materials, some other people that are giving you money informally, maybe from your cooperatives and all of that. All those must be in your records, in your financial records. That's very important. They want to see it. The second thing they may want to be interested in is your receivables. Okay, so if you can prove, for instance, that, oh yeah, what I need this money for now is just a gap of 1 month or a gap of 2 months, financial gap of 2 months. I already have made some sales. I'm expecting some, payment for all the sales I've made, for a proportion of sales that I've made. Let's say, take for instance, school example that I've been talking about. You want to show that you have these pupils in school and they have not paid and they are going to pay based on records. How do you convince them that those money will come in? That's where you have proper receivables record that can show that. You also should be able to show record of sales to show that your business is out there to make money and you are making money. How do we know you are making money if you don't know what your sales ledger look like, if you don't see the record of sales and records of revenue that is coming to you? So that is also very important. And then the last one is cash flow. Like I said, I think I've explained cash flow before. I want to reemphasize the importance of cash flow, management and preparation of cash flow. Like Mr. Kuala said, it may not be your tough to be able to do this without the professionals, whether your in-house bossa, your in-house accountant, your in-house cash officer. I mean, yeah, or you then have your auditor or your accountant, like professional accountant, like a firm like Mr. Paula's firm that do all those bookkeeping for SMEs. You may need to contact them. You can outsource them. That's the bottom line of what I'm saying. And they can help you to have that cash flow statement. I will show you what are the kind of money that are coming in for operating activities, for investing activities, for financing activities. Where are they coming from? What are you spending money on? Also for those three broad areas. That's the way accounting classify cash flow statements relating to the money you spend that come in and go out on for day-to-day activities. That's operating. The one that come in and go out for investing activities. So what asset have you bought? What assets have you disposed, and all of that? And the one that come in for financing activities. So where did you get your money from? Where are the sources of funding? Do you have loan to repay? Have you reflected those loan repayments you need to make? All of these are very important for the purpose of determining your creditworthiness. And that links your proper bookkeeping to the ability of financial institutions or lenders generally to determine your ability to say that you have capacity to pay and you are willing also to pay. So I will stop here and allow other speakers to contribute. Thank you very much.
Thank you very much, sir. That was very enlightening as well. So my next question is to Mrs. Jamila Sherif Ayedu. The question is, what basic bookkeeping tasks should be focused on for better credit worthiness? The basic bookkeeping tasks that should be focused on for better credit worthiness.
Thank you, Onome, for that question. So hello, everyone. I also want to say fantastic speech, Mr. Popola. Thank you so much for your knowledge, and certainly you have demonstrated, I'm going to say, keen expertise in this area. You broke it down very well for the businessman. So thank you very much for that. I want to, yes, I want to highlight on this question. So what are the tasks that are required or that you must focus on for creditworthiness? I want to kind of keep it very simple. I'm an entrepreneur, and trust me, I know as a businesswoman, entrepreneur, there's so many things that go through your mind that you have to manage as an MSME. Everything from the cash flow, money coming in, do you have a plan? Do you have effective leadership, sales and marketing, resources to execute? There's so much that's going on, right? And then you have to turn around and say, okay, now I have to make sure that I'm managing my books. And this has to go first and foremost. And I know that Mr. Popola talked about separating personal from business, right? Your accounts, you have to separate them. But I want to break it down into the things that have been commonly communicated. People talk about the 5 C's when it comes to getting access to credit, what lenders are looking for. I want to relate 3 of them to bookkeeping, right? So let's talk about capacity. That's one of the C's, and it's just your ability to pay. So what are the things in bookkeeping that you can do that demonstrates your capacity? Is by making sure that you demonstrate that you have a consistent income and that you as a person, since you're separating business from personal, that you also have a consistent salary. Make sure that your business, even though it's your business, set up an account, make sure that it's paying you a salary every month. That demonstrates that you're actually earning your own income from the business. And then you also want to make sure that all of your payments coming in are going into a bank account. That demonstrates that your business is generating income consistently. Try to reduce as much as cash payments as possible. Let them make sure that they're paying into your bank account. Again, that establishes your capacity, your ability to pay. Another one I want to highlight on is character. That's another one of the C's. Character is your willingness to pay, right? Lenders are going to want to know that in order to advance you credit. Bookkeeping can help you be able to demonstrate character by making sure that you have, if you've had credit before, that's actually going to establish it, right? So say, for example, you are taking your goods on credit and you're paying them off, say, at the end of the month. Find a way of making sure that that is documented somehow within a formalized system that demonstrates you've had credit before, you've paid it off consistently, and that means a lender can trust you to give you more. Pay your bills on time. That is also another, as a bookkeeper, your management is depending upon you to make sure that any payables that come in, any invoices that come in, that you're actually paying them as when due. That again demonstrates character. Have a good credit report. Know what is on your credit report. As a business, you are a live entity. And trust me, as a business owner, as an entrepreneur, sometimes that's a big statement to think about, but it's its own entity, its own body. It's outside of you. And so you want to make sure that you're keeping track of how well is it performing in the eyes of a lender by knowing what a credit report says about your business, if you've ever had credit before, and do that routinely. Another one that comes under character is making sure that you have stability in your business. You have an address that's consistent, that the lender can find you. If they're able to easily find you, they have more confidence to extend you credit. You have a phone number that's stable. You have an online presence. You have, your institution. If you have multiple branches, they can identify where those are. Have them on your website. All those things demonstrate that you are being credible and that you have character. And that's how that can tie that to that. Another one is capital. This is the insurance for the lender. Every time a lender wants to give you money, they want to know that they can get their money back. Having some form of capital helps to demonstrate that. And so as a bookkeeper, making sure you follow the instructions of our mighty keynotes. He says that there are things that are very important, 5 categories. And in your financial statement, those 5 categories will exist. Make sure you have your assets, liabilities defined, equity, revenue, and expenses. So having a financial statement, which you would just prepare once a year, or if you're doing management accounts, do that every month. Those things will help you to be able to demonstrate the capital that a lender would need in order to advance you some form of credit. I'm going to just add a few other things. So just know that those are the top 3 that from a bookkeeping perspective, you can really help make sure your business is in a position to get credit or to be credit worthy. Others are collateral, the conditions of the environment. There's a lot of other things there, but make sure you notate those 3. I'm going to add just a couple of others just because I want to make sure this audience, thank you for your patience, but if you're taking notes, if you're not taking notes, please take notes because we really want you to do well with this. So financial statement, like I said, was 1. Making sure you have a strong accounts receivable policy and process. If you are in the business of extending credit to your customers, whether they come in, they get it now and they pay you later, that is credit. And you want to make sure that you have a policy around that. When you would give it away, who you're going to give it to, how soon you're going to expect it back, and then make sure that your employees are following that, have a procedure around it, and don't waver away from it. It should be consistent. If you're going to change it, do it intentionally, make a whole process around changing it, but make sure you follow that. That is important. Vet your customers. Not everybody who comes into your business and says, hey, I want this, you should just turn it over to them and expect to get paid. It is a, when it comes to credit, you're a big business. I don't care how small you might think you are, you're a big business. You're giving away your goods or your time, and you want to make sure that you're getting paid back. So customers should have to deserve getting that. So vet them. Make sure you do some form of credit or background check on them. As credit bureaus, we make that very easy for you to do. And so it's important that you plan to do that. Establish an online presence. That is another one that I say is key. Make sure your sales are online. You can accept payments online. You can save your documents online, like Mr. Popola said, get Google Drive, Microsoft SharePoint, something to make sure you do that. And then finally, my last one that I want to, it's last but not least, but I want to emphasize when it comes to being creditworthiness, find a way to utilize technology. That is going to be such in this day and age, you can go into many businesses, they're using paper. When they get cash in their hands, they believe that they've made money. That's not true. If you have more expenses than the revenue that you're bringing in, you're under, right? You're in the red. So utilize technology to keep track of that. I'm going to drop a few solutions for you because I believe not only are we sharing knowledge, but we should also land with some solutions that you can actually go to. So if you have your pen and pencil, please take note. One solution I want to put a plug in for is OmniBiz. That's OMNIBIZ, www.omnibiz.com. If you are a retailer, and I know a lot of these small businesses out here are buying and selling, if you are a retailer and you have a challenge managing your inventory or your sales or your stock levels and things to that effect, this is a good software that you can sign up for, register for. It makes it very easy. It helps you with bookkeeping. It helps you at your point of sale. You can buy and get goods and have them delivered directly to your business. And so it makes it very easy for the small businessman. So please take note of that. The last one that I want you to go and utilize is www.getpaidfaster.ng. This is an application that allows for you as a small business, you have to collect on those. If you're giving credit, you have to collect your money, right? And a lot of small businesses exert a lot of time making calls, going after their customers, trying to get their money back. So getpaidfaster.ng will help you to be able to automate payment reminders, report late payers to the Bureau, allow for you to collect on past due payments much more quickly. And also it helps you vet and get the right customer on your books. It doesn't matter how great your business is if you're letting the wrong customers in the door getting credit from you. You work too hard for that. Get the right customers and utilize those two solutions. And I hope that your businesses flourish and do well. Thank you so much.
Again, thank you so much, very, very much for that, madam. That was also very enlightening, very rich. That was a presentation in and of itself. Thank you very much for that, madam. So the next question is for Mr. Oladimeji Peters. And the question is, can the credit bureaus assist customers utilize bookkeeping skills? Can the credit bureaus assist customers utilize bookkeeping skills?
Thank you, Onome. And yes, a big thank you to all the speakers, the previous speakers. I would like to say that as a credit bureau, what we do at CBAN and what all the bureaus do as a first stage is that we help you keep books on debt. So basically, there are two sides to every business. There is the equity side, and then there is the debt side. Now, every business would have to make a conscious choice on strategic decision on whether they would finance the company using equity or whether they would use debt. Now, there are many considerations to it. Either you want to dilute your ownership, in which case, or you want to retain control, in which case you can opt for whatever works best for you. Or you would say, for instance, that you would much rather go with the interest rate route, in which case we are involved. The downside to credit reporting, however, is that we don't report on equity, we report on debt. So basically, we help you keep books on debt already by default. That's what we do. And before we came into existence, there was no such information as to who has what debt or who is owing which bank or who is paying what installment. And no, there was no such information. So we literally created a concrete system of debt reporting, and we've been able to now improve on that going forward. So that's the very essence of what we do, help with your bookkeeping when it's debt related. So we are able to say that, look, this is what you collected from the bank, this is your repayment history, and then we can start to project futuristically that based on all that you've done in the past, this is what our projection for you in the future looks like. And that's essentially what we do. But then we still have to look at the aspect of the question, which is, how do you then utilize that bookkeeping in a way that says that we've actually helped you with this already, but are you taking advantage of it? Are you getting your credit report from any of the credit bureau? Are you able to call for your reports and see what banks are even saying about you? Some of the downside in the Nigerian market is information asymmetry, and I digress, but please indulge me. You'll find out that in some cases, the bank has a position on businesses or individuals on MSMEs, and the business itself does not even know what the position of the bank is. So maybe there's a small overdraft somewhere, somehow, and the bank has it in their books that, look, this person is in red. But the business does not even know what the bank is reporting about it. So why don't you generate a credit report and see what's the position of the credit bureau on you? And that would start to give you a symmetric information on and the position, in the event that you decide to now pursue a loan with the banks. Yeah, pretty much, yes.
All right, thank you very much, Mr. Peters, for your response to that question. Now, because of our time, I would like us to go quickly to one question that has been asked. I can see a question at the Q&A section. This question is being asked by Mr. Femi Adekoya. I understand that he's a journalist from The Guardian. And his question says, only 4% of SMEs have access to credit, despite its ability to create wealth and job opportunities. What is the major challenge hindering SMEs' access to finance that needs to be addressed urgently? So this is the question. I would create the indulgence that all the speakers at this point should give their take on this matter, beginning with the chairman, followed by our main speaker, since he has experience in this area as well, working with MSMEs, followed by Mrs. Jamila, and then finally, Mr. Peters. So that's the question. Let me read it one more time. Only 4% of SMEs have access to credit, despite its ability to create wealth and job opportunities. What is the major challenge hindering MSMEs' access to finance that needs to be addressed urgently? So starting from Chairman, sir.
Yeah, I think it's a very straightforward one. I think that's what we're actually discussing here today. Financial records is a major issue for a lot of institutions. I mean, when we are talking about access to finance, I mean, we have said it here over and over again that financiers, lenders want to know that you have the capacity to borrow. And they also want to know whether you have the willingness to repay the loans that is being advanced to you. The only way they can do that is to have proper records. That's the first thing. So if you cannot convince that you have proper records is proper records of accounting, book of accounting, that can then lead you to be able to produce what we call both management account and audited account. And thereafter is to be able to say that you have a structure that makes your business to really be what we call a going concern. A going concern business is a business that we believe will be there in perpetuity, that will be there to even outlive you. So if anything happens to you, that business is going to be sustainable and is going to be there for us to realize the indebtedness of the business, even if we are no more or if you are not around. So let me just talk about those 2 points and then leave others to talk about some other factors. So if you have proper books of account that can lead you to have proper management account and proper, audited accounts, then you are good to go. And the second one is you have proper structure that will say that your business can run in your absence and that your business can run without you and can run with all manner of transparency, which means you have effective governance structure in place. You have a board, you have management, no matter how small the teams are, that you can boast of this, then you won't have problem accessing finance. But what we have in Nigeria is that a lot of these MSMEs that we are talking about, over 41 million of them, are micro businesses. More than 90% of them are one-man businesses whose business is dependent on them and them alone. If they cough, the business coughs. If they are healthy, the business is healthy. If they are sick, the business is sick. And that is the fundamental issue. A lot of them don't have bank accounts. They don't keep any records. They don't have any governance structure. And that's the problem. That's why we are where we are today. Thank you.
All right, sir.
Thank you.
So, Mr. Popola, your take on this question, please.
Thank you very much. And I think the chairman has really done a bit of my, but then I still have some things to add. I once delivered a paper to a group of businessmen at Business Network International. And in that paper, I made to say that if you are a businessman and we ask you to produce your financial statement and you cannot produce it, then you are not in business. Because the only evidence that we can know that you are in business is when you keep proper books of accounts that can generate information about your business. It is then we can know you are in business. If not, then you are not in business. And come to think of it, wherever you move to, that's the only evidence you can show to people. We are talking about credit here. Somebody who is not keeping records, how do you know the performance of the business? How do you know the financial position? How do you know whether the business will have a future? So bookkeeping is the one that is hindering small businesses from progressing. I know there are some other things, but you see, it is a fallout from other things. Because if they have been able to put other things in place, they will know that bookkeeping accounts are the thing that they need to do. And to the person who has the question, I want to appeal that they also need to join us in educating our MSMEs. I've been able to see, reading through history, that one-man business can become a conglomerate when proper things are done. When there's good accounting system, when you have a good structure, then every other thing can fall in place. So one of the reasons why they are limited in accessing credit, critical, is lack of accounting and bookkeeping for their businesses. I rest my case.
Thank you very much, sir. So, Mrs. Jamila, please, your take on it.
Wow, well, the chairman has said very, very good comments. I think that those are very on point, right on point. And Mr. Popola, also thank you for your comments. I'll just add one more, only because I have come to realize that there are a number of businesses out there that, do work on advancing credit to their customers. What's the interesting part about that is that, these businesses are giving credit to their customers, yet they find it difficult to get credit from the banks, right? So that's a really interesting conundrum that we find our businesses in. But in order to operate and to grow the business, we have to, sometimes give credit to move our sales and to generate revenue. So the one that I want to hype on is really credit management. So if you find yourself with a business that is advancing some form of credit, you have to put in practice some form of credit management. And really what that is simply is your strategy and your process for how you're going to give credit to your customers, right? And how you're going to avoid, having customers that pay late or default on their credit. So you have to sit down, think about that, and define what is a good customer for you. Once you're able to do that and you can generate, a good book of customers and they're paying you well, then that's going to hopefully grow this 4% of companies that are only getting credit from banks, right? So we have to correct that funnel. There's no reason why businesses are giving credit, yet they can't get credit. That funnel needs to be fixed. So here's some things to just show you how bad it is, right? We've done a survey of micro, small, and medium enterprises, and just like yours. And there were three main questions that came out of this survey that I'd like to highlight. And now there are many other questions, but I'm just pulling out these three just for conversation purposes. We're all here just trying to learn from each other. The first question is, do you have customers that owe you money that you find difficult for you to collect on? 90% of the business owners that took this survey said yes to that. That is quite disturbing, that not only do their customers owe them money, but they're finding it incredibly difficult to collect on that money. Now that came across multiple industries, so it's not just one industry, so it's very broad to understand how challenging it is. And that means that we're not putting in the right practices of credit management in our company. So make sure you do that. Another question was, how many sales are actually being conducted on credit on a monthly basis? 48.8% of the businesses that took this survey had less than 10 credit sales on a monthly basis. That means that not a lot of those businesses were in the position of advancing credit. Almost 50% of them were not in a position to give credit to everyone. So they had less than 10 credit sales a month. About 32.4% of them had 10 to 100 credit sales a month, and 12% had no credit sales at all. Now, why is this one so, I'm going to say, instructive to us? That means that for businesses that are not in a position to advance some of their goods and services on credit, that means that some of their sales and revenue opportunities are also limited, right? That means that they are only going to get cash customers, and not everybody has all the cash up front to be able to get your goods, which means that you're going to sell fewer goods, you're going to have fewer revenue. So in order for businesses to be able to scale and generate more revenue, they have to be in a position to be able to get credit to offer their customers credit. And so that's another huge one. The third one, and I'll end on this, is why do MSMEs believe that customers do not pay or that they choose to pay late? I thought this was a very interesting one, in that MSMEs, they believe that their customers pay late because they have the money, but they're avoiding paying. And about 37.2% of the respondents said that. That was the largest percentage. The next one was 35.1% believes that their customers just don't have the money to pay as when due because they have cash flow problems. And so they just simply don't have the money. And the last one was 21.3% of the customers just have poor repayment patterns and processes themselves. So they don't keep good books, so they can't even pay their bills on time. So again, this is a cyclical problem. If we're not doing it, trust me, maybe the next business is not doing it. And so we're all going to be suffering. So bookkeeping is so important because it allows for us to be able to make those bills and pay those bills on time. I believe that this will probably be my last time to speak on MA. So I just want to impress upon the business leaders in this forum to be careful when you're advancing credit. that does help your business grow. I don't want you to be afraid of it, but we want you to be careful. And as a bureau, it is our responsibility and our job, or we take it as our responsibility to help you find the best customers. So there are debtors out there that you can get information on before you advance credit. So please go to any bureau and make sure you are not giving out your products, services, or goods without doing proper due diligence. We're here to help you. The 4 debtors you need to be worried about are debtors who choose to pay, but pay when they want to pay. So they're very slow in paying. They do eventually pay you, but those are debtors by choice. And so I want you to watch out for those. We also have debtors by circumstance. That means that, it's really no fault of theirs, whether it's a pandemic or whether they lost their job, but still be careful of those and be wary of those and watch out for them. You have debtors by mismanagement. These are credit abusers, and they are out there. You will find them in the bureau. You will search a customer, and you will find out that their history demonstrates that they just mismanage funds. They are unwilling to pay, and they deliberately avoid paying, and they're out there to cheat the system. So be careful of those kinds of debtors. And the last one is debtors by deliberate action. You want to definitely avoid those. These are, I'm going to say, credit criminals, right? They literally are out there to beat the system. They will take money with the intention of not ever paying you back. So as a small business, if you have to extend your business to advance credit, make sure you avoid any debtors that are by deliberate action. They are chronic and bad debtors. They write bad checks, and they very seldom will even have money in their account or hold money in their bank account. So as a bureau, again, we're here to help you to avoid those mistakes if you're trying to grow your business by advancing credit to your customers. So thank you.
Thank you very much, Mrs. Jamila. A very robust response. So finally, Mr. Dimeji Peters, the question is still on ground. What's your take on it?
Yeah, thank you. I think one of the things, pretty much all that needs to be said has been said, but I think if there's any addition from me, one of the things I think I should mention is the fact that when we say to businesses and MSMEs that don't, give out loans to customers that are not creditworthy, customers that are most likely not to refund you, or customers that are most likely to mismanage, what we're essentially saying is that, manage your risk, curtail it. So the risk appetite as a business. So basically we're saying, don't expose your business to the type of risk that would lead it to insolvency or bankruptcy. And we should not forget that the banks are also businesses, right? They also have a risk appetite. They also are subjected to credit crunch and liquidity ratios and all kinds of liquidity problems. So if, for instance, they give out the money and they're unable to get it back, they would have some very serious, questions to answer. And they may also file for, filing for Chapter 11 insolvency and bankruptcy. So the point there essentially is the bank also has, they also have a risk appetite. So for the banks, there's a book building process that goes on the background. In some banks, they have a L1 where they do, L2 approvals and, all kind of credit report checks and all that at the background. So at the point where they start to check reports on the MSMEs, or the business is not even aware that all that background check of you is happening. And at that point, they try to verify whether you are even the right type of customer for them, in whether you would most likely not refund their money or whether. So they have a risk appetite, and when they do all of that analysis, then decide whether or not they want to give. In some cases, in fact, in most cases, they don't have a credit report on you. And for them, if they cannot tell who you are or what your tendencies are, what your past behaviors are, they don't want to do business with you. So they will more likely give their money to Dangote that they know and curtail their risk, even though Dangote shouldn't be getting more money. I mean, we should be looking at how to balance out the Gini coefficient in a way that people that have less should get more, and then, you know, there should be some form of balance so that society doesn't become chaotic. But then what they find is once they don't see a book, any kind of credit report on you, they just assume you are not the type of customer that they want to engage with. So for starters, we normally say, you know, at least get your credit report, try to build one, try to understand that there is a downside to not having one. So the 4%, you know, 4% is pretty low. I mean, but there are other reasons that can also play into, but that's one of the major reasons why they don't have access. The bank is trying to monitor their risk, and they're making sure that, look, if the report on this person is not available, or if the report says this person is most likely not to pay back my money, or they have a history of defaulting, they would likely not engage with you. And so that's why we advise, get a report, see what's on it. And if you don't have one, now may be a good time to actually start creating one. Yeah.
Thank you very much, Mr. Peters. Thank you so much for that response as well. So to give the closing remarks, I once again invite the CBAN chairman, Dr. Tunde Popola. The floor is yours, sir.
Thank you very much, Onome. Thanks so much, everyone. I think it's been a very interesting day. I will start on a note of just making some summary of what we have discussed here today. First of all, is about proper bookkeeping. It's about the need to do proper records of accounting, first of all, and then also to digitalize the bookkeeping. That's very important for us to have access to credit and to be able to have credit worthiness. The second one is about our banking transactions. As much as possible, we should let our transaction go through the banking system. And that's the way the banks can see the volume of transactions we are doing, and that can help them to be able to see how they can help us when it comes to access to finance. And of course, using that also, we should separate our personal funding processes, our personal funding from our business funding. If you have businesses, let's separate the two. Let our personal life run as personal life. Let our business life run as business life. The third, and that's the third one. The fourth one is about managing our receivables. So most businesses sell on credit, and it's a normal thing for a lot of businesses. But the question is, how do you provide those who are selling to on credit? Now, if you want to borrow, we are just talking. We've been here now talking about how difficult it is to get money from the bank because it's credit. It's the same thing when you sell, when you give your product out there without collecting money immediately, you're also granting a loan. So the same process of bank profiling who they can give money to, they cannot give money to. You also should do something very similar to that. Not everybody should qualify to buy from you on credit. Jamila mentioned 5 C's, and she extensively discussed the 5 C's. That business, that person you are giving your product to on credit, is he or she willing to pay for it after using? And does he have the capacity to really pay for it? That's when profiling becomes very important, and that's where the credit bureau also comes in. By just simply asking them to give you their credit report or credit score, you can be able to know a lot about their transactions, especially credit transactions, and that can help you whether they have been very true to their commitment in terms of loan repayment, the level of risk they carry by knowing their credit score if they are individuals, and of course their exposures, whether they have more than enough exposure already to other people before they come to you to begin to want to buy your product on credit. So it's very important to manage your receivables very well. Have a very tight, process for selling your product on credit, and for them to be able to collect the money once that product has been sold on credit. And finally, you should always do your credit check. Even ahead of, requesting for loan from anyone, always make sure you do your credit check. All the bureaus, the 3 credit bureaus, First Central, CRC, Credit Registry, go to their website. You can have access to it, to the credit report, and to the credit scores. Okay, you don't need to visit them physically. They can give you, you can have access to that. And you know, as an individual, you're also entitled to one credit report in a year. If you're as an individual, not as a business, but as individuals, the law permits you to do that. CLC also can even give you through your telephone. If you download the CLC Credit Mobile, you don't need to use your laptop. You can use your telephone. Just download the application, CLC Mobile, and that's it. So it's so easy for you to get access to your credit report, which must be a starting point for you to even, before you begin to even apply for any loan. Check yourself first of all so that they don't embarrass you when you get to a bank, only to discover that you are not going to be qualified to take a loan. On this note, I want to say a big thank you to Mr. Taiwo Kokwola, who has given us the privilege to, you know, to take a lot from his fountain of knowledge on accounting and all that has to do with finance for small businesses this morning. Mr. Kokwola, thank you so much. I hope when we call you next time, you'll be obliged us to join us again. We derive a lot of advantage and benefit from your presentation and a lot of good insight. And my colleagues, Jamila, thank you so much. Nice for all the presentations you have made and explanation you have made this morning. And the same thing with Deji Peters. We thank you so much. I want to thank our executive secretary who put all of this together. Onome, it's been a wonderful work. Thank you so much. And our consultant out there, thank you so much. And to the participants, my appreciation goes to you much more because you've stayed the course since 11 o'clock when we started. And I believe you have taken one or two things away from this conversation this afternoon. The slides presented by Mr. Popola will be made available to all those who come in here. And of course, the live recording will also be made available for those who may want to go through it again, and for those who are not here, they want to see what we have discussed today. And like I said at the beginning, this is the beginning of our engagement with MSMEs on how we can support them for access to credit. Today, the subject matter is bookkeeping. The next time is going to be something else, maybe business plan and business planning. Okay, as a way of accessing how to do it in a way that can help you to get access to credit. Once again, thank you so much. God bless you all. Bye-bye.
Right.
Bye-bye.
Thank you very much, Dr. Tune Kukwala. So we've come to the end of this webinar. I would like to say a big thank you to all our speakers and to all the attendees who, like the chairman has said, stayed through to the very end of this webinar. I believe you've learned a lot that will help you boost your credit worthiness. We'll endeavor to inform you about our other initiatives because, like we said, this is the first of several of this series, where we'll be addressing the challenges that you are facing as business owners, because we are here to help you, to assist you, to inform you, to educate you so that this huge gap between people who want to give you loans and people who want to receive loans is considerably closed. So like the chairman said, we will share this presentation with you as well as the live recording, especially to those who could not attend, as soon as we're able. For further information about CBAN, please visit our website on www.cban.ng, or you could send your inquiries to info@cban.ng. If you check the chat box, I've already put the three websites of the three credit bureaus, so you can also check those out to get more information about getting your credit reports or maybe your portfolio management or any other information that you need. For information about Tiasha Associates that Mr. Kukwala comes from, you will get your information from his presentation. So if you need to also engage his services in terms of your bookkeeping, he's readily available to help you with that as well. So once again, thank you very much. Please still stay safe. We're in the middle of the pandemic. I think some of us have momentarily forgotten this. So please let's continue to stay safe, and all of us hopefully will be in good health the next edition of this series. Thank you once again to chairman, to our speakers, attendees, to everyone, all the back office people, my team. Thank you very much for everything and for your support and your attention. Have a wonderful day. Bye-bye.
Bye-bye.
Thank you, Chairman. Thank you, Mr.
Bye-bye.
Popola. All right, then. Bye, everybody.
Bye-bye, Chairman. Bye-bye, others.
Bye. Bye.